Hello. Today we are going to analyze the company Finiotex Chemical Limited. It is listed on BSE and NSE. NSE has FCL and on NSE 53333. So I have downloaded the recent investor presentation released on November 2021. So it's a as you can see from the front page, it's a textile specialty chemicals, and it's a monopoly on textile chemicals. And also it has different domains on drilling specialties, home and hygiene specialties, and other specialties chemicals. So let's see the company overview. So it has delivering its product and services to 70 plus countries, and mostly 57% of the revenue come from the other countries and 43 from the India. It has 450 products other than services. Like it's a B2B product, and they are also delivering to the customers as B2C products, and they have 450 products, and they have assets of 43,000 megatons per annum. They produce the chemicals. They have standard plus dealers in Indian market and international market, and this is the Finiotex investment case, like how they perform, how they do the businesses, how they acquire. Like they acquire the Biotex Limited, and that's a Malaysian company, and they have a global reach. 50% of sales comes from 60 plus countries, right? And the company started on 2004, and then it's incorporated on 2004 only, but they acquired the FCPL chemical on 7, then listed on BSE, then other corporate actions. Then they acquired the Biotex company on 2019. So they have the major domain on textile specialties, home care, hygiene, drilling, and this is the monopoly. These are the strategic partnerships, strategic collaboration with Edo and CTC Belgium, and they have their own plants on Belgium portfolios. And this is Australian company Healthguard and Sashmira. They have joint venture to operate in Malaysia. They have launched the new facilities in Maharashtra for their expansions. Focus on growth and diversification. Like these are their key products: Finocon, Edoco, CleanJet, and this eco-friendly larva and pupa eradication. Like these are mosquito controller, and these are home hygiene chemicals, and these are their home care and hygiene division. Like in recent year, after the corona boom, the company has grown very exponentially because of their home care and hygiene products. If we see the website, they have lots of product based on chemicals, oils and gas. So they provide different companies for their oil and drilling, and they provide different companies for textile chemicals, and they have own clean and hygiene products. So these are the textile chemicals clients of Finiotex Chemical Limited. They have like Shahi, Welspun India, Only Vimal, Raymond, and Vardhaman, and like they have 57% inflow revenue from foreign international, and 43% from India. So they have various assets. Like they have Finiotex, and they have acquired 79% of the stake of Biotex. They have greenfield developments, they have new product categories, and as the China's chemical market is down, the international investors are looking for new chemical companies from India and other countries, European countries. And this is the Finiotex companies has already set foot on international market. So they have a board of directors and like very good board of directors and good team. And let's see what website and what are the products on websites. It's like they have lubricants, specialty chemicals, spotting fluid, loss calculative additive. I think website is slow. So you can see the investor relation and other shareholding patterns, earning presentation, investor presentation, financial results, etc. on their website. And this is their annual report. So you can download it from the links given below in the description. So you can, it's a very detailed annual report, so it will take time to read all this. So let me brief by reading from the screener like how they perform. So let's look at the ticker tape. So it has gave the returns of 399% on 5 years max. On 5 year it has given the return of 315%, and on 1 year it has given the returns of 219. So, and it's a small cap company and it has high beta, high alpha, so it's high risk, high volatility stock. So the current price is more than intrinsic value because it's at PB ratio 6.30, P ratio 31.95, and sector P is 24.61. So obviously you can see the intrinsic value is more than the like current price is more than intrinsic value, because the sector P is 3.15 and the current PB is 6.30, and the sector P is 24.61 and the current P is 31. So obviously it's clear that it is overvalued right now. It is overvalued right now, but it will but it's a right time. It's I don't recommend to buy the stock, but because of the right now the market condition is up and down, it's a volatile, so this is not the right time because lots of IPO and market is overvalued right now. So it is good time to consider, as the stock is not on overbought zone, but overvalued but not on overbought zone, so it's good. So what the pro says the low probability of default in next 2 years and insufficient data. So what are the holding patterns? Let's see the holding patterns. So let's see, total promoters holding 64.82, mutual fund 6.15, domestic institution 0, foreign institution 1.48, retail and others 24.56. So promoters have lots of holdings on September 2021. Like total promoter holding, if we see, it has decreased from 71 on June to 862. Total retail, it is decreasing. Mutual fund have increased the holdings. If we see the alpha and the beta value, Phenotex Chemicals, so alpha value is 23.30 and the beta value is 2.4041. So any stock which has alpha greater than 1, it is a volatile, because as the market rise, as the market grows, it will also grows with their percentage of alpha and beta. If the market goes down, it will go down with the alpha and beta. So it's good for swing trading, but not for day trading. But it is good for swing trading and long term trading, because it is a fundamentally strong company, and they have a market cap of 1369 and 1369 crores, and closing price is 127. It's a good price, and P ratio is overvalued, as we have seen. And historical revenue growth of 5 years, if we see, it is a 16%. So it's good. Debt to equity is almost 0, like 1.60. So It's a good company, have less debt to equity. If we see the 5-year max graph, so it is growing, so it's a good company. And if we see the quarterly results, it has increased from 2018, it has increased the sales from 46 to 78 in September 2021, operating profit from 8 to 15 crores, and net profit, it has increased year on year basis, like as you see the 10 crore, 13 crore, 11, then 9, then 11. So it has continuously increasing profit and loss. If we see the operating profit, it has increased the operating profit from 2012 initially to 2021 41 crores, and sales, it has increased, it is increasing, the sales are increasing, the profits are increasing, the net profit is also increasing, like from 6 crores to 43 crore, like every year they are increasing. And it has given the compound growth of 127% 1 year CHR, to 20% return on equity last year 22%. If we see the balance sheet, they have increased the reserve from 41 when they started to 206 in right now. So they have increased the reserves from 187 to 206 in 1 quarter. They have total liabilities of 292 crores, and fixed assets 59 crores. As you can see, you can read the balance sheet, so you can get that ratios. So these are the share holding patterns. So it's a good company, and it's a potential multi-bagger company, because if you see the, it is a it's a monopoly on specialty chemicals in textile industries, and it provides different services to different domains, like oil and gas, cleaning and hygiene, and textile. If we see the products in cleaning and hygiene, it has various products. These are the specialty textile chemical overviews, and they provide on every step different types of products. These are the products, and on so if you want to swing trade the stock, it's a good for right now, because if we see the 200 moving average and 44 moving average, it has continuously increasing. Like if you have invested on October 20, or if you have invested on July 21, it's 87, and it has rise to the price of 130 on September 21. So it's a good, it is rising continuously. And if you see the daily moving daily chart, daily time frame, and 44 moving average and 200 moving average, it is best for swing trading right now, because if you see the, as the market rises, it has high alpha, high beta, it increases rapidly, exponentially. Then if the market goes down, it goes down because of the high beta, high alpha, high beta. This is the squeeze momentum chart. So you can see, like if you have if you enter in this strat and in this point, like it's 99 for, and then exit on here 130, it's a swing trading. So you can get profit of from 99 to 137. So it's a good for swing trading, good for long-term trading, but not good for day trading, because in day it can move very in one day. It's not good for high alpha, high beta value. It will be most volatile in day trading. So that's all for today's analysis. We'll come with next company in next analysis. Thank you.